Good morning, everyone, and welcome to PwC webinar. My name is Susanne Stormer. I'm a partner and the ESG and Sustainability Services leader here at PwC in Denmark. And it's my great pleasure and privilege to introduce this webinar, which is the first in the fall series, the fall season of the webinars we are hosting on sustainability topics. So what we select for these webinars is what we know is hot topics, interesting topics, and certainly there are many dimensions to sustainability. So let me also take the occasion before we kick off the contents of this webinar to introduce you to our most recent CXO magazine, in which we have interviewed a host of interesting executives from Danish business community to interview them about how they work with ESG sustainability as part of their business strategy. It's just out and you can find it on our website, read the interviews and glean inspiration from the insights that they're sharing. And so building on that and leading into the topic of today, the key point that all of these interviews are sharing is how sustainability is a factor in decision-making, in executive decision-making, and of course also for stakeholders on how they choose to make decisions related to the company. And none are more important than the investor community, the providers of the financial capital, who are key stakeholders for information about companies' performance. So that is the topic for this morning's presentation, our webinar, and I would be I am very happy to hand over to my colleague Nikolaj Wassermann, who will steer the show. We have a really interesting case and an interesting guest invited. So over to you, Nikolaj.
Thank you very much, Susanne. Good morning and welcome to this webinar on ESG preferences. I have my colleague here, Signe Josefsen, and we are very happy to welcome you to this webinar on sustainability preferences. We know that it's a topic that is interesting a lot of people, and we have a lot of people online today to hear this. So just a few practical notes before we start. Questions, please add your questions in the chat. We will share the presentation following the meeting today, the webinar today, and we will also share the recording of the webinar. So you can, if you miss it or if somebody missed the presentation, you can see it afterwards on the online site pwc.com. Signe?
I think you covered basically all the practical stuff, so I think we should
Then I would like to introduce our speakers. We are very lucky today to have Kerstin Lysholm from Nordea with us today. And we have two guest speakers from PwC Switzerland. We have Antonius and Sophia that will join us a little bit later in the webinar today, and then we'll talk about also sustainability from a broader perspective. But over to you, Kerstin, and I'm happy to have you in the studio with us today.
Thank you very much, Nikolaj. And good morning to everyone. I'm excited about the audience, such a large audience that has signed up. So my name is Kerstin Lysholm. I am currently heading the investment products and offerings unit in Nordea Asset and Wealth Management. In that function, we are working with the product offering that we are bringing towards our private customers in all our Nordic markets. And obviously, we have worked very intensely with sustainability, both from a savings advice concept perspective and from the perspective of integrating sustainability in the product offering as such. So I'm invited here today to share a bit of insights on how we are actually working with the integration of sustainability in the savings advice. So basically enabling investors to make conscious choices. And
also how we have worked with adopting the MiFID regulation that came in force here 2nd of August. Before I'm going into this, I think it's very important to highlight that in Nordea, we have actually worked with integrating ESG preferences in savings advice for more than 3 years already. So while the MiFID regulation now gave us a regulatory framework how we are supposed to do this, the concept as such to ask customers about ESG preference when performing investment advice is not new to us. So it is more about adopting an existing concept to now a regulatory framework. But let us just take one step back. What is actually the purpose with all of this? So in 2016, the EU started implementing the 17 Sustainable Development Goals. And we do know that there is an annual investment gap of nearly 180 billion euro to reach the EU's climate and energy goals for 2030. To close that gap, it requires both public and private capital. So when in 2018, the EU Sustainable Finance Action Plan was adopted, one of the key purposes of that act was to actually direct capital flows towards sustainable investments, basically helping achieving the Sustainable Development Goals. So when we now, since August 2nd, are supposed to ask in every advice session across Europe our customers about sustainability preference, and in that way triggering a conscious decision or a more conscious decision, this is meant to help guiding and redirecting capital flows. And that being said, in Nordea, we are actually extremely positive about the ambition of the regulation. Of course, it comes with challenges in the implementation, but having in mind that we are helping contributing the 17 Sustainable Development Goals, we feel we can master all the challenges that might occur along the way. So what is this about? I think for a long time, we have been used to looking at sustainability risks. So environments and society's impact on companies and on the financial performance of companies and thereby on the financial performance of investments. What we are looking at now is how an actual investment impacts the environment and society. So if an investor chooses to invest in a certain company, what impact does that have on environment and society? And there's two aspects. One is the negative impact, so also called principal adverse impact. So how does an investment negative impact environment and society? And then the next step where we look at positive contribution in the SFDR regulation, also defined as sustainable investments. So if you're actually looking at if you invest in a company, how does that positive contribute to environment and society? How we working with this? We will get actually back to these two aspects, so just keep them in mind for a second. As said, we have already worked with the integration of ESG preferences in our savings advice for more than 3 years, and there is a couple of learnings in that. Of course, we didn't know everything from the start, so we have had the chance to iterate our way of doing that and to get smarter along the way. There's a couple of key guiding stars and key learnings out of this. First of all, it's very important to make this relevant for the customer. So the regulation as such is really complex and might be very complicated to understand. So our task as a financial advisor is to translate that in a way that it becomes relevant for the customer, meaningful and tangible. So the customer actually can make a conscious decision. Then again, to have a meaningful dialogue with a customer, we need to be able to meet a customer preference with a relevant product offering. So we need to work constantly on developing our product offering to meet the developing customer preferences. And last but not least, and we will get back to that also later, this lives through our advisors. So if we really mean this, if we really want to drive the change, if we really want to help our customers to understand what they can do with their investment decisions from a sustainability perspective, we need to enable our advisors. And that means dedicated training, big efforts in educating advisors. It also means that we do a full integration in our advisory tools to make this easy, smooth, and at the end of the day, a very valuable conversation in the customer dialogue. So it's not, from our perspective, about just the regulation. Of course, we want to live up to regulatory requirements, but it's foremost about making this meaningful for the customer to actually understand the impact one can have. Obviously, when we look at the advice concept as such, bringing in sustainability, it is initially increasing complexity, right? We already beforehand work with the risk capacity of a customer, so where we have to do an assessment of what kind of risk profile would be suitable for a customer. We also already discuss in the advice session how much a customer wants to be involved in decision making when making investment decisions, and now we have to take in yet another pillar with sustainability. Our guiding principle is that these three pillars need to be equally considered. So none of them may jeopardize on the other ones. Just to maybe take one example to illustrate a little bit better what I mean by that is if you look at sustainability commitments now, after we get first data now from product providers, it's obvious it's much easier to make higher commitments on high-risk asset classes. But that must not lead to, in our savings advice concept, that this would mean a customer with a high sustainability preference should be pushed towards a higher risk profile. So this is something that in the conceptual work, we really need to cater for, that these three pillars are not basically jeopardizing each other, as said. So how have we really gone about MyFit now? Before 2nd of August, the last 3 years, we have asked one question for towards our customers when evaluating their sustainability preference. It's not exactly the question that you see here. It was slightly different before, but it was basically a yes-no question. So the only thing we did since 2019 was to evaluate a general preference for sustainability. Now, as we get the regulatory framework, we had to enhance that and go basically some steps further. As you recall, I was talking earlier about negative impact and positive contribution. And that is the two parts that we basically are testing now with a customer that in the first question would state an interest for sustainability. We would then in the next layer ask about negative impact and positive contribution. Basically on negative impact, how important is it for you that your investments work towards reducing negative impact? And one step further, how important is it that your investments focus on achieving a positive contribution? Depending on the outcome of the answers or the answers of these towards these questions, we will then classify our customers into 3 ESG preference profiles. We have one profile for customers that have no preference. Then we have a profile for that we define as an aware customer and an ambitious customer from a sustainability perspective. Earlier, before MyFit, we only had 2 preference profiles. So we've basically now extended that to a 3rd profile. That is the step we've been going. So this is the first step, assessing the customer preference from a sustainability perspective. Next step is then obviously to meet that with some product recommendations. Here we would start by evaluating the current portfolio that a customer has invested in so far. To do that, we start by categorizing all the products that a customer has into different product categories from an ESG perspective. So we have defined different levels of ESG product category. To do that, we use EET data. And to be a bit more precise, what we actually use is SFDR article categorization. We use PI integration, and we also do use sustainable investment commitment levels. Then we do know that every customer has not like a single investment, but a portfolio consisting of a number of investments. So we then we have defined certain requirements or recommendations basically for a customer that is in an aware or ambitious profile. What would we recommend would be relevant if you have a preference, an aware preference for sustainability. What would be the thresholds that we would think are suitable for your portfolio to actually meet that preference. So we would say there should be a minimum amount of products categorized in the certain levels that we have defined before. And obviously for an ambitious customer, these thresholds would be even higher. Yeah. There comes the challenge from. Challenge comes obviously from the data side. So as you see, we use EET data to classify products into different categories. And then we have thresholds based on those categorizations. So it starts with the EET data. There was a recommendation to publish EET data from beginning of June. Not many have started publishing the beginning of June. We saw analysis from Morningstar that came out just before the regulation came in place here. So they basically published this in the summer, where they could see even then it was less than half of the Article 8 and 9 products that at all reported PI consideration and sustainable investment exposure. Basically, two very important factors for us to classify and categorize products into the different ESG product categories. And still then it was less than half of Article 8 and 9 products that even reported that data. You can also see here in the charts the sustainable investment commitment levels that were reported. So for Article 8 funds, basically vast majority of products reporting sustainable investment commitments up to 20% only. For Article 9 funds, it's the majority over 70, but very few products actually in the 90 to 100 range. I think in general, we would maybe have expected a little higher commitments, but let us see where the market will settle here. So one challenge being the lack of data. The other challenge actually being that SFDR and EU taxonomy have been differently interpreted by the different product providers. That again leads to different approaches that were adopted when then the sustainable investment exposure is calculated. So basically what we are ending with again is that it's very difficult to compare products across different providers based on sustainable investment commitments or taxonomy alignment. So therefore, we again stand with the task to actually do a qualitative assessment of a product before we really go out and actively recommend a product for a customer that articulates an ESG preference in the advice session. We also do need to do that anyway in order to validate the product promise from a greenwashing perspective. So how do we handle that in Nordea? We basically differentiate the product offering. We have an advisor, a general advisory offering that can be brought to customers that have no preference for sustainability. There is some standard requirements on sustainability also for those products. So any product that enters our advisory offering, may it be for a customer with or without ESG preference, will need to live up to these basic criteria like the product provider need to be UN PRI signatory, and there is some sector exclusions. But as soon as we're talking about that our advisors should actively recommend products to customers that have articulated an ESG preference, we will go a step further. We will, of course, look at the ET data, but we will also do always a qualitative assessment to secure that the product promise is actually living up to our requirements when it comes to sustainability and to mitigate any risk for greenwashing. The qualitative assessment goes both on the product providers level, so the asset manager as such, company level, where we look at policies, we look at the resources, we look at what kind of goals and reporting is done, you name it. But then we also do on top a specific product assessment, where we look at how is ESG integrated in the investment process, what approach has been chosen to do sustainable investment commitments, how is active ownership performed, and so on. We do also monitor these products regularly. So just because one once has gotten a stamp for being allowed in this very special product offering towards customers with ESG preference is not a guarantee for the future if one doesn't constantly live up to the requirements. So ongoing monitoring process, and if needed, an engagement process with the product provider. So this is how we are working with it. then I also wanted to take the chance to actually give you a little bit of motivation. Why is it actually worthwhile doing this? Because I can feel the pain of standing with a very complex regulation and now needing to adjust existing processes and ways of working. So what is our experience with this in Nordea? As said, we have more than 3 years experience and we can see that it works. So when we started asking our customers in the savings advice session on, do you have a preference for sustainability? Do you want to take that into consideration when making your investment decision? Back in 2019, it was only about every 5th customer that would articulate such preference. When we look at it now, and it's quite stable now over more than a year, we have reached a level where it's about every 2nd customer that actually is motivated to take that into consideration when making a decision. So what this is telling us is when we are successful in talking about sustainability in the advice session, we can actually onboard our customers on that journey. And how do we get there? One of the key enablers for us has truly been extensive training of our advisors, extensive education, really enabling them to talk about sustainability in a meaningful way that is relatable for the customer. But then let's remember what the whole regulation was about. It's about guiding capital flows towards sustainable investments. And we can actually see that it's working if you look at the chart on the right-hand side. So what we measure here is we measure gross flows into our sustainable choice product range. So basically those products that we are offering to customers that have a articulated preference for sustainability, how have flows into those products developed over the years? We started measuring this there in the beginning of 2020, and you see in the beginning it was just about every 10 euro that would go into these products. By now we are looking at rates of roughly 30%. So we do see that the intention of the regulation to steer a higher share of flows towards sustainable investments is actually functioning. And I think that should be the motivation for us to keep working with this and to help achieving the Sustainable Development Goals. I think this is what I had planned to share. And with this, I would open up for questions.
Yes. We have some questions from the audience. So one of the questions is, of course, how do you do if a customer asks about taxonomy investments? They would like investments in taxonomy aligned products. How do you handle that?
I can say that now we've been working with this for more than 3 years. It's not a question that is being brought to us in that way. So I think the taxonomy investments is such a it's such a theoretical term that it doesn't naturally come to the customer to ask about that. And I think that is exactly what we've been working with in the concept development, to actually translate regulation and complex terms, technical terms, into something that the customer can relate to.
And how have you managed to train the advisors to actually interact with customers on this? I guess it's very complex for normal people to understand in terms of sustainability.
Yes, it's been very intense training and constant training. So it's not like one session for each advisor. It's like we have to revisit the terms that we are using. We have to explain what is sustainable investments, what is principal adverse impact, what does this mean for a customer? How can you explain it easy? But we have also worked very much with integrating small explanations in our advice tools. So if one comes across during the advice flow and one is kind of suddenly stuck in the conversation, that you basically can get short videos, quick explanations to help the conversation. But we have invested in this substantially and done extensive training, both physical, then online, and then we have these kind of regular follow-up learnings that everybody can participate in. And it's then, of course, also encouragement from the top, that this is important for us in the area.
Yeah, of course.
Yes. Very interesting, I think.
Yeah.
We have more questions.
We have more questions, yes. Would you take the next question?
I think we should move on maybe to, and we take, we can wrap up in the end.
We can do that, yes. So maybe we should, can I take this one?
Yes, of course.
So if we move on, then we are lucky to have two guest speakers, two very capable guest speakers from Switzerland that are live with us today, Sophia and Antonius. And I will hand over the word to you guys, and thank you for joining.
Thank you.
Thank you also very much from our side to give you some kind of challenges, also status quo and outlook on the topic of preferences. Some aspects we heard in the previous session also by Nordea, where we picked that up. In particularly the main challenges to summarize, we have that on this slide outline. On one hand, of course, the complexity itself of the topic that has already been mentioned, in particularly kind of with the regulatory requirements and the difficulties on both sides to bring together the ESG preferences, then also with suitable sustainable products that fulfills on one hand the obligation and the context, in particularly to the MiFID, but also the linkages of, you heard the word SFDR and the Sustainable Finance Disclosure Regulation, but also the taxonomy here. And this is above the complexities leading part, and also beside of that dedicated sustainable investment strategies that plays also an important role, as for example, where you have exclusion, ESG integration, best-in-class thematic approaches that should be considered, and also impact products. Moreover to that, there are also kind of a leeway on regulatory uncertainty, although there is clear specific guidelines here also regarding, for example, to PI, also to the aspects that you have to ask to such extent the minimum percentage and thresholds that we heard before. But it leads also to leeway, in particular when it comes to the dedicated sustainable investment frameworks from institution by institution. One, and out of these both, complexity and regulatory uncertainty, there is also the question that raised regarding to data. Here we heard that regarding to the EET template, but also additional data that comes up, in particularly to the preferences on the product. Also lack of taxonomy, as we've seen on the previous slide that has been presented. And also now the new or kind of topic that is also very important, the fear of greenwashing and on the point of sales. What we see is also regulators take into account that more and more, and it's not only to have green and sustainable products, meaning what is behind of that concretely, the substance of sustainable investments that plays an important role, but also when it is ESG, the substance has to be shown and also asked at the end for the client. And in this context, there are several aspects and scenarios that should be in the future also taken into account. With these, we would like to highlight on the next slide, in particularly the road so far and the different market approaches with implementation that is of relevance. As I mentioned before, several institutions have internal concepts, what is meant by sustainable investment. These can diverge also from an asset management perspective and the wealth management department that has to be harmonized. We've seen that in the past, these are kind of challenges there. Now, clear definition by several financial institutions has been provided, but nevertheless, what we see also that in the past exclusion strategies, particularly, these are, and also there are first papers that indicate these are not anymore sustainable strategies. Also ESG integration that makes the difficulty in the future more grave and should be taken into account. And of course, outline with that, the fundament provides then the MiFID, SFDR, and also taxonomy. And this is then linked to have a clear product offering in place with the whole product governance and the product approval process that should be taken into account, sustainable, meaning SFDR products, Article 8, Article 9, where you can distinguish, or even mainstream products. And one important aspect is also that is linked to the impact of the business and strategic decision, that what we see in the market is, and also mentioned, when you have an impact product that outlines that clear also has a objective to the taxonomy, it's here you have to provide kind of dedicated KPIs when it's, for example, clean tech or net zero and so on. This plays an important role. Moreover to that, as it has also to such extent mentioned, is then the technical implementation. You have to have profiles in place. We heard that by Nordea, this kind of know or aware or ambitious profile. But it's also the fact here that this has to be linked with the whole product universe. And this is not a one-day exercise itself. And on top of that, what we heard is also to make employees aware, in particularly client advisors, as Nadia mentioned, with the dedicated staff, meaning explaining what is PI, meaning this kind of negative impact also that comes out, and of course further classification when it comes and clarity when it comes to kind of materials and marketing aspects to show the client, yeah, we have here an impact product, we ask the right questions and bring that in. And of course, store these informations in client profiles also in the future to make additional outreach when you can develop new products. I said the current market is focused currently on climate, as we have most of the products are on CO2, carbon footprint aspects, but there are also additional product offerings that can come on top as biodiversity, for example, circular economy, and so on. And these are growing areas also with the implementation of the EU taxonomy that plays a dedicated role and should be relevant, of course, for the different client types as retail and institutional clients that will going forward ask that. Of course, in all these exercises, the topic of net zero and science-based target will come and be an important role. With these, I will hand over to Sophia that gives the way forward also kind of regarding to the aspects of higher quality on ESG data, what are the regulations and how this looks in the overall context.
Thank you, Antonios. So as we heard, one of the main challenges that we currently have on the market in regarding the ESG preferences is the high quality data and the availability of ESG data. So there are a lot of efforts also from regulators to increase this quality and the availability in order to then be able to have an offering to match with the different preferences. So we have listed a couple of initiatives here that will hopefully lead to this higher quality ESG data. So on one side, we see currently a lot of movement around SFDR concepts with one of the most important, this is the topic of sustainable investment. Although there is a definition, a legal definition of that, there has been some uncertainties on the market on how to interpret this in certain cases, especially for individual securities. And we saw evidence of this in a recent query that was done by the ESRs to the European Commissions, where they asked for further guidance on what could be classified as sustainable investment, how this, what types of concepts are possible. So once the Commission comes back, and there is a certain market standard that we see settled, there will be much more regulatory certainty in terms of what is classified as sustainable investment, so that the dedicated instruments can then be matched with the preferences of the client. We also, as many of you know, have, starting as of the beginning of next year, the new SFDR templates being applicable, meaning there will be much more information and much more transparency for all types of ESG products in the EU, speaking Article 8 and Article 9 related disclosures, especially in terms of asset allocation, for example. So these products will be stating their percentage of sustainable investment, their percentage of taxonomy investment, and of course, whether they will be considering PI and how. So all these information, at least for SFDR products, will be available on the market and can then be taken from the distributors, from financial advisors for the matching of the preferences. This also comes at the same time when the PI reporting is starting as of end of the year. So here we see this mismatch of the different deadlines coming. Firstly, the MiFID II preferences as of August, and then later on all these detailed SFDR requirements. So at least for the SFDR products, it is expected that in the future the data quality and availability will be much better. Also in the European ESG template, the EET, that is being used as a market standard for this transfer of such data. Of course, we have also the taxonomy reporting. This is one of the biggest gaps currently in terms of data, as most companies in the EU are not currently reporting on their taxonomy eligibility. So it's not really possible also under SFDR to calculate a taxonomy alignment of a product or financial instrument. This is due to the different, again, a mismatch of deadlines. But as of next year, we have an obligation for all big companies in the EU to report on all of the 6 environmental objectives, so the full taxonomy reporting. And also starting as of next year, they will be reporting on the alignment based on certain KPIs. And once we have this reporting for different companies, this will come as of next year. There's like the whole year there will be reports on the taxonomy, and then this will translate into a higher quality data and availability for individual products as well. There are also thoughts about expanding the taxonomy with further activities, with further objectives, also in terms of social taxonomy in the future. So it will be interesting to see there as well how this, what the timelines will be there and the data quality. Of course, very important is also probably one of the most important in this term is the expansion of the current non-financial reporting in the EU. So we have the non-financial reporting directive currently, which is being or will be replaced by a new CSRD directive. And this has a lot of impact in terms of data. So first of all, the scope is will be massively expanded. There are a lot more companies that will be reporting in the future, and on the other side, the scope of what is being disclosed is also extended. We have massive non-financial information package on what these companies will be reporting. Also in terms of the principal adverse impact indicators, meaning when this data is available in the future, this can then be translated into calculations for individual products, for individual financial instruments that can then be matched better to the individual preferences of the client. One other development is the plan from the European Union to have the so-called European single access point, which would be kind of a database where all companies will be filing their non-financial reporting. And this, of course, will ensure better access and also more comparison between the different data points.
Probably also to outline the last point that Sophia mentioned, CSRD, this European single access point. The CSRD includes, let's say, the GRI, the EU taxonomy, also SFDR, PI, and TCFD aspects. And at the end, as Sophia mentioned, the scope will be extended. We have not only listed companies that provide further this information, but also large undertakings and small and mid-sized companies in the future. And of course, these have then to be reported in this European single access point that can be used for free, this information, and leads to a next wave of additional regulation that comes on top and can be used then for the preferences, because in this data platform, you have then the taxonomy information additional, where we collect now currently via the data providers as MSCI or Sustainalytics and so on, or by your own, and this leads, of course, kind of harmonization and simplicity at the end of the day, and enlarge the investment scope.
So what lies ahead in the ESG preferences? So of course, the better data availability and data quality is expected to lead to also more product offering, more different products being available to investors to cater to these different preferences and to better respond to them. We are seeing a lot of supervisory attention on the topic, not only on MiFID II preferences, but also on the whole sustainability, of course. So ESMA has already, for example, signaled the possibility to address a certain MiFID II preferences topics further via Q&As, based on the practical implementation of the requirements, based on their supervisory experience, and also by the competent authorities. So that would be definitely a development to follow and to watch. In terms of product offering, like I said, not only the ESG data availability, but also by asking these ESG preferences, the market will have a better understanding of what is being sought by investors, what is being interested, and be able to, of course, develop the products that are asked and on the market. We already see this, that certain distributors are actively asking manufacturers on certain types of products, or certain data, which in terms has led to a whole product offering check, also from a manufacturer, for example, from an asset management perspective, so-called reclassifications from products under SFDR to try to have a product that is being sought after and can be distributed to the clients with ESG preferences. And last but not least, we shouldn't also forget the topic of greenwashing, which is further on the agenda of regulators and is recognized as being possible also at the point of sale. So we expect a lot of supervisory action worldwide on this as well. So thank you very much, and we're open for your questions.
Thank you. Back to Nicola.
Nikolai?
Okay, it's a question for Antonius and Sophia. Are you aware if the FSA in Switzerland or other European countries have made any comments on this area?
Thank you for this question. What we see currently and also is that, as said, the European Union is in the driving seat, in particularly when it comes to clarity and ESG preferences. What we see also is in Switzerland, we have institutions that have cross-border business, all with these in the European Union. They have amended the MiFID II aspects. Switzerland, we have now kind of more a leeway, kind of self-regulation that comes up. But they also stated if you're compliant with the MiFID II obligations, then you have also included the ESG preferences correctly. And what we see is, as Sophia mentioned before, the topic of kind of integrating these plays here an important role in the upcoming years. And of course, further clarity will come out, in particular when it comes to other topics such as greenwashing and so on.
Okay, thank you very much. We have another question for you guys.
Yeah, so the next question is whether, if you look out in Europe, how is this implemented across, you know, if you take the small or the big banks, is there any differences how they implement these preferences?
There is a difference regarding for the global banks. They look for, you know, a harmonized standard worldwide to ask to such extent preferences in a similar way, to have here a concept in place, because also regarding to the distribution of their products that they would like to have and also to sell in different markets. Here, what is important is also to understand the local obligations that comes up, or the aspects that should be taken here into account. And of course, the bigger ones have much more budget to push this topic, whereas the smaller ones try to focus on very pragmatic, ask the basic question in the first step, because this is an ongoing journey. Also with the service offering. If you do not have a service offering, yeah, you have to start there.
Okay, super. So we are moving on with a question for Kerstin.
Yeah.
Can you estimate the impact in terms of reduced CO2 emissions or reduced impact on the biodiversity or water from your investment advice?
Yes, we actually, I mean, that's again relating back to data availability, right?
Mm-hmm.
So we actually are building reports and trying to record how that actually impacts on these parameters. What we also been doing for a couple of years already is to help the customer to actually understand the impact with the investment decision he's making by having this rather simplified footprints. So if you compare different investment alternatives on carbon emission, water usage, waste, whatever you want, how is your existing investment looking against maybe a little more sustainable alternative? Basically creating these eye openers. Yeah.
Okay. Very interesting. So I think we have another question on the chat.
Yes, we have many questions on the chat.
Yeah.
I think that so what, in your opinion, is missing in this regulation to align and ensure a level playing field? Do you have a thought on that?
Missing. I think the regulation as such it's a very deep question, maybe more for people working.
We could also turn the question and ask Antonius and Sophia. Do you have a thought on that? Is anything missing in the regulation in regards to creating a level playing field?
Oh, that's an interesting question, because the regulation is the wording itself. It's actually very broad. I mean, yes, we have the different preferences, but it still leaves a lot of flexibility on an individual level on how to interpret this. So it's not more than that the regulation itself is probably missing, in my opinion. It's still, there isn't the market practice that is being settled, and this will come in the next months when we see the finalized concepts. And yeah,
probably here also to add, meaning kind of flexibility is also very good, because it's kind of innovation also for products and also selling that. But I think so what is very important is to link also, there is kind of a harmonized standard in the way of aspects of greenwashing scenarios, obviously on a global scale. Also, when you ask the topic of substance, how much sustainable investment is in a product. Concretely, for example, when we look in the US, we have there the NAME Act. In the NAME Act, you have to mention that 80% when you have an ESG product should be sustainable. In Europe, it's diverged also from jurisdiction to jurisdiction. In Germany, you have aspects. In other countries, that is 85% or 90%. And I think so these are kind of aspects that provide kind of a harmonization when you have these scenarios, then also link it with the right questions and also with the product offering. That's the reason why it's important to have here kind of a framework in place with controls on your product side that mitigates in particularly this risk and provide also clarity when regulators or supervisory authorities comes in. But I think so this is anyhow the leeway and the standard where it comes. And as Sophia mentioned, there is a harmonization planned by ESMA and the others for all European national competent authorities, the regulators, that this has then an indirect impact on the legislation itself and for the financial industry, because there will be kind of the harmonized standard at the end of the day.
Okay, thank you very much. We have one last question to you. Looking forward, how will the regulation in the field of taxonomy develop over the coming years? And do you have any good advice how to prepare for this?
Sophia would like to start, and then I...
Yeah, sure. So first of all, I think everyone on the market is very concentrated on getting everything done for the current requirements, because we're still not settled there on the current 6 objectives. And other than that, we have expansion plans. There are also draft reports around expanding to a brown taxonomy or to a neutral taxonomy, and later on social taxonomy, so taxonomy on social activities. So there are a lot of different ideas there that have been kicked off on an EU level, but we'll have to see, of course, which of them will be implemented in the end. And as a best way to follow the developments and to really start preparing early. We saw this also with the taxonomy. We had a lot of transition period in terms of between the proposals and then the implementation or the applicability of the proposals, and it was worth starting early.
Probably here also to add, and also we see that the massive work that is on the horizon regarding to the taxonomy and the 6 objectives on top. These 6 objectives lead to additional legislation and clarification in the different areas also. And regardingly to the taxonomy, as Sophia mentioned, the S will also have a huge impact. Chain will change also a lot and will provide further clarity here. And one important aspect when we focus on the environmental taxonomy is the topic of transition financing, because this is very elementary also to reach the Paris goals, also to have the topic of net zero on the agenda with science-based targets. Also now several institutions start to commit in that end, but have to evaluate these risks and also the effort that it comes. And the other thing is also start to thinking linkaging several aspects. For example, for these that have not yet started with building a framework, start potentially using the SDGs that we heard at the beginning with linkaging of taxonomy and also PI, and then also science-based targets for dedicated sectors to have here a consistent approach, meaning this is also what we see going forward, because with the net zero discussion, this opens a new front and a new area where it can be further elaborated.
Super. Thank you very much, Antonius and Sophia. We will close the chat now, and we will prepare to finish this webinar. So thank you very much for today. It was a very interesting topic, and it's without doubt a lot of things to do out there. So it's just to get started. And we had also a lot of joiners today because this is apparently a very interesting and hot topic. But behalf of me and Nikolai and rest of the team, I would like to thank you, Kerstin, for joining us here today. It was a pleasure to hear all your perspective on this interesting topic. And thank you very much, Antonius and Sophia. It was very interesting to hear how the PwC Switzerland is working with this topic. So, and also thanks to all of you who joined us today. It was a pleasure to see you all out there, and we will share the slide deck afterwards, and you can find also the webinar recorded on the Danish PwC webpage. So if you have any questions or anything you are in doubt with, you are more than welcome to reach out afterwards, and we will be very happy to help you.